Have you ever wondered why it seems like your support and resistance levels are not holding? You're struggling to make good trades at support and resistance level when you see these levels? Well, welcome and let me help you break it down. I know you're probably a newbie trader or you've been on the charts for quite a while and you're still finding it difficult to understand how to identify key levels. I've had a lot of beginners come up to me and ask questions like, how do I know which is the right support and resistance level to use? Do I always buy at a support and sell at a resistance? Do I have to use horizontal levels or horizontal lines to draw these levels, or do I use rectangles to draw these levels? A higher time frame support and resistance, the same thing as lower time frame support and resistance. These are all major concerns that a whole lot of newbie traders always experience when it comes to the market. Well, the luck is on your own side today, and today I'm going to be breaking it down step by step on how to identify key levels, what to do when prices get to key levels, how to use key levels on different time frames, and understanding the difference between support and resistance and how they turn into demand and supply zones. But before we get started and we head onto the chart, do me a favor, hit that subscribe button and give this video a thumbs up if you do enjoy this video, and don't forget to leave questions in the comment section and more videos you would like to see. Let's head to the chart, guys.
So let's get right into it, guys. Like I said, there are a lot of questions people always ask, wanting to understand, how support and resistance work, the difference between support and resistance, demand and supply, differentiating higher time frame from higher time frame support and resistance from lower time frame support and resistance, drawing support and resistance properly, and most importantly, how to execute this trade using support and resistance. And that's what we're going to be attacking today on the chart. So first of all, let's define what support and resistance are. I believe most of us already know that. Well, a support level is a price area in the market where price is failing to go below and is responsible for creating or bringing in buyers. So buyers are more interested in wanting to buy from a support level. Similarly applies to a resistance level. It's an area in the market where prices is failing to go higher. Okay, and people are always wanting to sell from that point. But should we always buy from a support, or sell from a resistance point? Is another problem that a lot of people also have. So let's look at understanding support and resistance. Okay, differentiating the higher time frame support and resistance from the lower time frame support and resistance is going to key us into understanding the basic demand and supply. So the difference between the higher time frame support and resistance and the lower time frame support and resistance is that one is responsible for altering the course of a trend. Okay, whereas the lower time frame support and resistance is responsible for continuing the trend. Okay, or works better on when we're looking at the trend. Okay, so the higher time frame support and resistance now can also be identified as the basic demand and supply. Why is that? You can identify here and see that it created a turning point that altered the previous bullish structure to the upside and brought in a bearish movement into the market. And from here, we see that this support level here also altered the course of prices into a bullish run. And from this resistance here again as well, prices move into a bearish run. Now, this is how you can tell a higher time frame key level or a higher time frame support and resistance from a lower time frame support and resistance. So let's just get this off my charts quickly, and let's draw this support and resistance on a higher time frame first. So we're starting out with the daily, and we are we're going to scale lower into the smaller time frames. So when you want to draw your support and resistance, focus on using not just lines, but you could also use rectangles. Okay, you could use rectangles to identify support and resistance. But for me, I like to keep my charts clean. So sometimes what I would do is to use, especially for the higher time frames, I want to identify the key support and resistance on the higher time frame first, and I'd like to use two lines. Okay, just to fill that point very well. Okay, so we can come to this support level here now. Okay, and I would also use two lines at this point here. And then for this resistance level here as well, I would use two lines. Now, the reason why I'm using two lines is I still want to get the feel of drawing zones, but not necessarily using the rectangle tool. But of course, you can use the rectangle tool. That works well. But you just don't want it to be everywhere on your charts. Okay. Now, understanding the lower time frame support and resistance is in this nature. Okay. So remember that the higher time frame carries along the overall structure of the market, whereas the smaller time frame moves moves the trend. Okay, so that's what we want to look at right now. Okay, so let's take for instance the 4-hourly time frame is moving on a higher note, but remember that within this 4-hourly time frame, this is also a structure, or this is the trend moving on, meaning that on the smaller time frame we would have the market trending to the upside. So this is where higher time frame support and resistance come in, and lower time frame also comes in. So we have this 4-hour, okay, this 4-hour resistance here. Okay, so this is the 4-hour resistance here, and this is the 4-hour support here. But within this move of the 4-hour bullish move going up, we're also going to get a trend. Market is going to be trending, creating what? Series of higher highs and higher lows. It is the creation of this series of higher highs and higher lows that creates the smaller time frame support and resistance that we're interested in. Now, the next question is, does this work as well on the higher time frame? Not necessarily. You want to focus on using this lower time frame support and resistance as entry points when you're in a trending market, and you want to focus on using the higher time frame support and resistance, or which you can refer to as basic demand and supply, because like I said, the higher time frame are basic demand and supply points for me. If you're still watching and you've gotten to this point of the video, please do not forget to hit that subscribe button and give a like and a thumbs up if you've been following and understanding so far. So let's leave these diagrams and let's look at it in the charts. Okay, so this is what I mean on the charts. Okay, so we have identified these levels. Okay, we've identified this resistance here, and we also have identified this support here now. So this is on the daily time frame. Now let's view what it looks like on the 4-hourly time frame. Okay, so you see we moved from here, okay, on the resistance point, and then we became bearish. So this acted as what, like we said, a basic demand and supply point, because we reversed and altered the previous bullish nature of the market, and we became bearish. Now this is where lower time frame support and resistance comes into play. Okay, so here was a previous support level because prices kept failing. Okay, because prices kept failing to break this level, and instead prices bought from this level up until prices reversed to the downside. So what does this mean? This is a very good lower time frame support level, and this is the trend. Okay, so we're going to follow this trend. So what we're going to do now is mark that level. Okay, we want to mark this level now as a good support level. So here, and now what happened? Support became resistant and prices continued to do what? Sell off. Again, we have this area as a good support level because prices constantly pushed at this level and failed to break below and went to the upside. So it means buyers were present here. So what do we have here again? Now we have what? Another support level. Prices came to this support level, couldn't hold, and did what? Came below. What do we have here again? We have another support level. Prices failed to break this level and pushed higher, meaning buyers were present here. And what happened? This became a good support level. And what happened when prices broke that level? We had a retest of it. So what happened here? Support, okay? Support became resistance again. So this is how you can, easily identify the difference between higher time frame support and lower time frame support. So depending on where your higher time frame is, you see my higher time frame was like the daily, weekly, and now I'm using the 4-hourly as my lower time frame here. Okay, and then you can continue to spot it. So this is what I mean by the trend. Okay, the trend is your friend in identifying minor or lower time frame support and resistance. So these are the minor support and resistance. Again, you see prices did what? Hold here as a support. Prices came here, failed, and prices is presently selling off. So this is how you use the minor support and resistance against the higher time frame support and resistance. So higher time frame support and resistance is changing and altering the course completely, or changing the trend of the market. And we can also identify it as what? As a basic demand and supply level, because it will take a whole lot of liquidity and volume to move prices towards that direction. Whereas the minor support and resistance are located in trends. They are the ones that you hear support, when support breaks, retest, becomes resistant. That is where support turns resistance and resistance turns support. I hope you're following. Now, I've already shown you how to draw and identify support and resistance properly. When you're going with the trend, you want to focus on using rectangles, especially, so that it is more of a zone for you. So that when you identify a false breakout, you can wait for prices to fall back in. Okay, so just take, for instance, we had a false breakout here. Okay, so we had a false breakout here, for instance, at this point here. See, this was the support level, and then prices broke through it and then came back down. So when you have a false breakout like this outside of the level, you do not panic and run into the trade. Instead, you wait to see if prices would move higher and retest this support level again to make it to hold again as a support level before you choose to buy. But if prices should come down below it again, then you know that, okay, this is still a valid support level and this was just a fake out. So you want to take your trade just right after prices closes below and your stop loss above that fake out. So this is how you can execute, a trade using support and resistance. Now, another thing that you want to make sure you note and understand is support and resistance are not just areas where, because it's a support level, you just run into the trade. You need to pay attention and lay focus on understanding the use of price action. So you want to study the candlesticks around these areas, and you also want to find confirmations. You can use other things like your indicators as a confluence. So let's take, for instance, here. Okay, we see prices buy from a buy zone, okay, from the RSI showing an oversold position to an overbought position at about the 70%. And that was exactly where this previous support level became resistance, fell through, and then started selling. So this would have acted as a good confluence, merging your indicator and your support and resistance level. Not only that, but you would also identify, or you can also see, that we had a very good price action at this level. And what price action did we have? We had a shooting star candle and a possible harami that happened within that shooting star candle. That's this small bullish candle. And then we had 1, 2, 3 bearish candles, which also showed what? Momentum. And just after we closed below, we had this huge momentum candle, identifying, or rather explaining and telling us that what? There are more bears in the market than there are buyers. And you would have easily just taken your sell from here and had your stop loss just above this level, and you would have targeted easily. You'd have targeted easily a 1:2 risk to reward just at this other support level, and prices breaking that support level. So you have an easy 1:2 risk to reward trade on this time frame. And mind you, this is the 4-hourly time frame, so that would have been a very good move. So these are a few things you need to pay attention to when you're trading support and resistance. So let me just type that down for us. Okay, so you want to focus on price action. Okay, so price action candlesticks. Okay, then you also want to identify that your support is a valid support. Okay, if false breakouts, look for momentum back after the breakouts, and you can use indicators like the RSI and moving averages for more confluences. Okay, you can use that for more confluences. So this right here is how you can Okay, this right here is how to vet and enter a trade using support and resistance. Okay, guys, so this is one of the easiest way I think I can explain it to you, especially for the newbies. So yes, what you heard about support and resistance is true and works perfectly fine, but you need to vet exactly what you are using and know how to use it. And if you're trying to still understand the difference between the higher time frame structure and what I mean by the trend, do click the video that is going to pop up at the top side on understanding structure in the retail way, the smart money way, or the ICT way. So you have a better knowledge about the macro structure and the micro structure, or the major structures and the minor structures. They would further help you, navigate using support and resistance.